Well, on a day the Prime Minister came out in strong defence of the overall fundamental strength of the economy, comes news of the GDP numbers in this quarter. The numbers, some would say, reflect an economy in trouble. GDP growth is at 4.4%, manufacturing at 1.2%, agricultural growth at 2.7%. Earlier, in his most direct attack on the opposition in Parliament in recent times, Prime Minister Manmohan Singh hit out at the BJP, saying that despite what they say, he commands a certain respect in the Council of Ministers. Well, to discuss the GDP numbers and the importance of the Prime Minister's remarks on the state of the economy in Parliament, and indeed the road ahead, I'm joined by Montek Singh Ahluwalia, the Deputy Chairman of the Planning Commission. Thank you, sir, very much for being with us. GDP growth at 4.4%, down from 4.8%. Is this worse than what you had expected?
Well, we were aware that the growth rate had been slowing down, and we never felt that in the first quarter there was much sign of an improvement. I think the hope is, and that's more or less what the Prime Minister said, that he expected it to be a bit flat, and it's in the second half of the year that you might see an improvement. I mean, that's mainly because, you know, a number of steps have been taken in the last 2 or 3 months to take care of some of the impediments that are holding up investment. But the impact of those on actual investment, there's always a lag. So we were aware that the growth rate in the current year was going to be poorer than was predicted when the budget was formulated sometime in January.
And so therefore, sir, 4.4% is what you had expected.
But
just as a matter of clarification, you had expected it to be about 4.4%.
I had not expected any particular number for the first quarter, but I didn't expect to see any strong performance in the first quarter.
So manufacturing,
I think the
manufacturing, sir, at 1.2%, would you agree that it's the performance of the manufacturing sector at this stage which has really been driving down the economy?
I think manufacturing has put in a very weak performance. A lot of that, if you ask the industry, a lot of that is in their view because investment is down. I mean, you know, it is high levels of investment that give a stimulus for the production of capital goods. And it's true that investment has been down. Our analysis has been that one of the reasons why investment is down is that a lot of ongoing projects were held up for a number of regulatory and other clearances. That's why the Cabinet Committee on Investment was set up. That committee has taken a number of decisions. Those decisions are now being implemented. But, you know, between taking a decision, getting it implemented, impacting projects on the ground, there's always a time lag. So the underlying assumption has to be that it's in the second half of the year. Exactly how good our growth will be is too early to judge at the moment. But I do agree that the first quarter is a pretty weak performance.
So agricultural growth at 2.7%, do you expect that to dramatically improve with the monsoon being way above average this time around? To what extent will the monsoon actually improve agricultural productivity and therefore improve the GDP numbers in the quarters going ahead?
Well, I've not actually made a detailed sectoral calculation. But yes, I would expect in the course of this year that agricultural performance would be better than 2.7%. But you know, you have to remember that agriculture at the moment accounts for only about 15% of GDP. So even if agriculture does a whole 1 percentage point better than, let's say, in the previous year, the direct impact on GDP is not going to be more than 0.15%. Of course, there are second-order linkages. Rural economy does well, demand goes up, other production in rural areas goes up. So the impact of a really good monsoon would be somewhere between 0.3% or so of GDP to something a little higher, but not that much more.